Hello, welcome back. It is Mike from Canavan Wealth. My favorite day of the week, Tuesday, November 14th. Time for Mike Reads the Journal. Big day for the markets, up 2%. Of course, inflation data came out. Good news. That's why we're up so much. But if you look year to date, we are only 2% off the high that we saw back in August. Boy, what a difference just 2 weeks makes here. Obviously, incredible kind of surge. The months of wondering, why the news made no sense and what what was going on with the markets, all seems to have reversed. Now, are we going to get a little slump here? We could. Really would be surprised. There's a lot of good news coming about the economy. Once the market starts to surge like this, I think FOMO takes over, and it'll be interesting to see. All right, this is really the reason for at least today's hike. Inflation numbers came out, and they were largely steady, but steady at numbers that are pretty good. Core around 4, overall at 3.2. I think everyone has seen gas prices coming down. Look at this 10-year Treasury, 4.4, which we've got, yeah, right here, 4.4. It was it was over 5% just not even that long ago. We can jump in, see it here. Look at the drop. Incredible. That's just the 5-day too. Look at the 3-month, almost back to where we were just a couple of months ago. So big changes in the markets that makes a lot more sense. So obviously, inflation being low, just assuming that the Fed is no longer going to be raising interest rates, and we'll see interest rates steady, I think, for about 12 months. We'll see. All right. Commercial real estate. We've talked about this a lot. I wanted to touch on this for one very specific point. This is talking about mezzanine loans in commercial real estate. This is a lot of office space as well as hotel space in downtown areas and a high foreclosure rate. But this entire article is really talking about how opaque this entire industry is. One of the mezzanine loans, they kind of relate them to second mortgages, effectively non-traditional financing on buildings. So they're not getting their financing through banks; they're often getting them through some type of an investment provider that's taking on these loans. Interest like 10%. And a lot of these, I guess, have been foreclosing, but they're also just talking about how difficult it is to really kind of understand this area. This is no shock. Corporate, we've understood that commercial real estate was going to struggle after the kind of move to remote work, and that shift, it was in some ways permanent. A lot of them are being changed over to uh, you know apartments and things like that. But I think what I want to say is this is on everyone's radar, right? If a lot of people are saying like the next big thing is going to be caused by commercial real estate, the collapse of commercial real estate. And I don't think the next big thing is ever the thing everyone thinks it's going to be, right? We have such, our thumb is such on the pulse of what's going on in commercial real estate that I find it really hard to believe it's going to catch people by surprise that offices in downtowns are empty. The simple truth is cities are still doing really well, right? They're redefining themselves, but they are able to do that redefinition. So, uh, to be perfectly honest, it's kind of a boring article, but I really just want to talk about the commercial real estate. Although, yes, it is in trouble, it is on everyone's radar, just like this coming recession and whatnot, and why maybe it didn't come is because everyone expected it, right? We don't, the markets are too tight for us to everyone be worried about something for it to really, turn into something. All right, last article. Oh boy, China. Uh, I love talking about China's troubles, not because I want them to fail, but because it is, what I think, which of course this will not be. I think the thing that is really going to derail the global economy here is some type of a major collapse in China. What that collapse is, I don't know. But this is talking about more executives vanish in China, casting chill over business climate. It is one thing to be worried that they're going to steal your trade secrets or that they are going to create copycat businesses to compete with you if you go and try and compete in China. It is another thing entirely to be worried as a chief executive that you are literally going to be abducted, right? This is like beyond the scope of business. There's a great quote down here now, of course, somebody from Hong Kong. So uh, obviously a worry, a difference in ideals, but it's a quote here pretty much saying that China cannot move forward without real institutional reforms towards the rule of law. Would be difficult for any meaningful economic recovery to occur or sustain. And China is in a place where they need to start a recovery, right? Because they are in decline. But while they are continuing to abduct CEOs and executives. Now, some of these executives, they believe it is for corruption charges, but right, like here in America, if you're a corrupt CEO or something, you at least get a trial. You are not simply abducted. So, oh boy, lots of problems with China. That is really it. Great couple of weeks for the market. I suspect we're going to see pretty positive news out of the rest of the year, but that, of course, is just my guess. Honestly, if we ended the year right where we are, it'd be a great year, up 17%. Next year, boy, it's going to be interesting to see what the 10-year Treasury does all of next year when interest rates stay the same. And I think that big indicator is going to be much like today, inflation. Where is inflation 3-4 months from now? Or is it level? Is it starting to trend down? If we're starting to trend down and we were going to see inflation return back into the 2% world, that would really be a big win for the US and the economy, for interest rates and everything. So that's about it. I hope it's been informative, and I will talk to you soon. Thank you.